When Warren Buffett handed over the keys to Berkshire Hathaway this year, everyone wanted to know one thing. What would Greg Abel do with nearly $400 billion in cash? We just got our first real answer. On August 8, 2026, Berkshire Hathaway reported its second quarter results under new CEO Greg Abel, who officially took over in January after running Berkshire Hathaway Energy for over 2 decades. Warren Buffett stayed on as chairman. The numbers show a company that's finally starting to spend. Berkshire repurchased about $4.5 billion of its own stock in the quarter. That's a massive jump from just $235 million in the first quarter, and it's the biggest quarterly buyback Berkshire has done since 2021. But that's not the only shift. For 14 straight quarters, Berkshire had been selling more stocks than it bought. That streak just ended. In the second quarter, Berkshire became a net buyer again, purchasing roughly $20 billion more in stocks than it sold. One of the biggest moves was a brand new position in Alphabet, Google's parent company, worth about $10 billion. That stake is already large enough to rank among Berkshire's top 5 holdings, alongside longtime favorites like American Express, Apple, Bank of America, and Coca-Cola. Here's why this matters. Berkshire has been sitting on the largest cash pile in its history for years. At the end of the first quarter, that pile hit a record $397 billion. Buffett had said publicly he was struggling to find good value in the market. Shareholders kept asking the same question: when will this cash actually get put to work? A quick reminder on how a buyback works. The company uses its own cash to purchase shares on the open market, which reduces the total number of shares outstanding. That means each remaining share represents a slightly bigger slice of the company. It doesn't guarantee the stock price goes up, but it does concentrate ownership among fewer shares. Now we have a partial answer to the cash question. By the end of the second quarter, Berkshire's cash and treasury bill balance had dropped to about $344 billion, down slightly from $347.7 billion at the start of the quarter. Using a broader measure that includes other short-term holdings, the total fell from a record $397.4 billion to $365.5 billion. That's still an enormous amount of money, more than almost any company on Earth holds in reserve, but the direction finally changed. For the first time in a long while, the number is going down instead of up. The earnings themselves were strong too. Operating earnings, which strip out investment swings, rose to $13 billion, up 16% from a year ago. Net income came in at $25.7 billion, more than double last year's $12.4 billion, largely thanks to $12.7 billion in investment gains, including $10.9 billion in unrealized gains on Berkshire stock holdings. Underneath the surface, results were mixed business by business. The manufacturing, service, and retail group grew earnings 24% to $4.47 billion. Berkshire Hathaway Energy jumped 27% to $891 million. BNSF, the railroad, grew 6% to $1.56 billion. But insurance underwriting profit fell 13% to $1.73 billion, and insurance investment income dropped 9%. The quarter also included the completed acquisition of home builder Taylor Morrison. So, what's the opportunity here? If Abel keeps deploying cash at this pace into both buybacks and new stock positions like Alphabet, that could signal more confidence and more capital return ahead. A management team willing to buy back its own shares is often saying, in plain terms, that they think the stock is undervalued. Now the risk side. Berkshire's own stock is up only about 3% so far this year, meaningfully behind the S&P 500's 13% gain, even though it has climbed 9% over the last 3 months. Some of the cash decline also came from acquisitions like Taylor Morrison and the previously announced OxyChem deal, not just buybacks, so this isn't purely a we love our own stock story. Insurance underwriting weakness is also worth watching since insurance is usually Berkshire's core engine. Going forward, keep an eye on three things. 1. Whether Berkshire keeps buying back stock at a similar pace in the third quarter or whether this was a one-time acceleration. 2. Whether Abel adds to the new Alphabet position or holds steady. 3. Whether the cash pile keeps shrinking, which would confirm this is a genuine shift in strategy rather than a single unusual quarter. To wrap up, Berkshire Hathaway just posted its biggest buyback since 2021, became a net stock buyer for the first time in 14 quarters, and opened a major new position in Alphabet, all under new CEO Greg Abel. Earnings were strong, but the stock itself is still trailing the broader market this year. This looks like the clearest sign yet that Berkshire's record cash pile is finally being put back to work. This video summarizes news and potential market impact for educational and informational purposes only. It is not financial advice. Always do your own research and consider your own risk before investing.